conventional finance, they are burdened by adaptation costs incurred while making them Sharia compliant. And thirdly, these costs, transaction costs, shrink profits. For various well-known reasons that I won't go into, radical changes in the modus operandi of Islamic banks are not expected. But despite these shortcomings, Islamic banks have largely succeeded in transforming non-banking Islamic societies into banking societies. Islamic societies were mostly non-bank societies, and transforming them into banking societies was a great achievement, was very important, because savings of the masses can now be channeled to finance major projects. In that sense, Islamic banks have been successful. Something happening, yeah. But Islamic banking focuses on usually well-established businesses or traders, young and promising entrepreneurs with high profit potential, but high risks are completely discarded. This is because Mudaraba, the instrument that focuses on young entrepreneurs, comprises merely about 5 to 6% of the investment portfolio of Islamic banks. That's a pity, because Mudaraba was the partnership practiced by Prophet Muhammad sallallahu alaihi wasallam, and therefore constitutes a sunnah. If, despite such impeccable legitimacy, Islamic banks by and large ignore Mudaraba, that is primarily due to the mismatch of funds problem. This means deposits are for the short term, but Mudaraba yields returns in the long run. So because of this mismatch of funds, primarily because of, there are some other reasons too, but primarily because of this mismatch of funds problems, Mudaraba are not very popular with Islamic banks. They allocate only a small percentage of their total investment portfolio on Mudaraba, about 5 to 6%. We need Mudaraba, however, not only because it has impeccable Islamic legitimacy, but also because it is the most entrepreneur-friendly financial instrument that we have. This is for the following reasons why it is entrepreneur-friendly. First of all, it's a partnership, and the entire capital is provided by the capitalist partner. This means even, say, a third-year engineering student with an excellent project but zero funds of his own can obtain finance. Second, he does not need to provide collateral or an excellent balance sheet of some 5 to 10 years. And thirdly, in case of loss, he does not lose his non-existent or meager capital. All the pecuniary loss accrues to the capitalist partner. So if they wish to enhance entrepreneurship, which is the essence of economic growth, Muslim countries must reintroduce Mudaraba into their financial systems. First step involves Islamic banks. Indeed, how to nudge these banks in the desired direction of increasing Mudaraba in their, increasing the share of Mudaraba in their investment portfolios. Two policies come to mind. First, make all profits earned by Islamic banks from Mudaraba operations 100% tax-free, while taxing other profits as usual. Second, force the banks to increase their Mudaraba total investment ratios by annual increments to a reasonable amount, perhaps to 20%, within, say, 10 years or something like that. I mean, this percentage can be negotiated, can be discussed, but basically this is the idea, to force them to increase their Mudaraba total investment ratios by small increments annually. But even with such policies, there is only limited potential for Islamic banks to reintroduce Mudaraba. The true potential lies with non-bank financial instruments. The essential point here is that these instruments must not have mismatch of funds problems, because that is the main problem. This means they must have patient capital. Throughout Islamic history, the most patient source of capital was the Waqfs. This is because once donated, Waqf capital cannot be withdrawn. This is precisely why Waqf sukuk synthesis is very doubtful, because sukuk must be redeemed, and while redeeming it, Waqf is destroyed. So sukuk, Waqf synthesis, in my opinion, is wrong, very wrong. So another linkage, however, Waqf Esham linkage, Waqf Esham synthesis is much more preferable. I will explain Esham in a short while. But Waqfs have patient capital par excellence. Since this is so, there is no reason whatsoever why a Waqf cannot be established with the purpose of financing young entrepreneurs. There is also no reason whatsoever why the instrument of choice should not be the Mudaraba. This is because it is not the original capital, but it's usufruct that is invested. Mudaraba is surely risky, no doubt about that, but Waqf capital is not exposed to risk, its usufruct is. To sum up, a Waqf established with the purpose of financing entrepreneurs acts as a Rab el-Mal, as a capitalist, and provides patient capital. Such a Waqf may obtain its initial capital through personal donations of well-to-do persons, or crowdfunding of masses, or in the form of donated stocks. In this case, the dividends are made available for Mudaraba investment. This is known as Waqf of stocks. All of these will be 100% Sharia compliant. When a Waqf, however formed, invests its capital with an entrepreneur, it should do so in the form of equity finance. Equity finance is well known in the West and is routinely applied in Silicon Valley by venture capitalists. So venture capital is Islamic. That's the point I'm trying to make. There are 8 steps in the modus operandi of venture capital, to which I cannot go due to time restrictions. But remarkably, I can say this now, remarkably, all 8 steps are identical to Islamic Mudaraba. That's remarkable, because we are talking about a classical 1,500-year-old Islamic partnership practiced by the Prophet, and this partnership is being applied in its basic structure by the venture capital sector in California. This is remarkable, of course. In any case, in short, no one has been able to explain this, so I might as well add this remarkable coincidence or whatever it is. It is very difficult to explain, but the fact stands alone. In short, a Waqf established for financing entrepreneurs and applying equity finance, venture capital, will be both highly effective and Islamic. So what I'm saying is that a Waqf can apply venture capital by purchasing the shares of entrepreneurial companies. A Waqf designed to help entrepreneurs can do this. But there is another candidate which can help entrepreneurs, and that is Esham. So that's an alternative. Alternatively, some shares issued by the state can also provide patient capital for financing young entrepreneurs. So we are talking about some shares issued by the state. So it's also public finance instrument. Some enables a state to borrow capital from the public without the rate of interest. Why this is so important? Consider the case of Saudi Arabia, which borrowed a total of $32.5 billion with interest. For the custodian of the Haramain al-Sharifain, this is shameful to say the least. Had Saudis used Esham instead, they could have borrowed this huge total without interest. And they would have avoided embarrassment. Of course, it's very embarrassing. Since I have explained the modus operandi of Esham in detail elsewhere, I will not repeat myself here, but you can look at these sources. You can, this is in this book, I explained the details of Esham, and you can, I wrote a number of articles in, and they are all available freely in my page in Academia Edu. Suffice to say that Esham is a unique instrument of borrowing because the date of redemption is decided by the borrower, that is by the state, and not by the investors, lenders. As long as the government continues to pay the annuities, and this is a relatively modest amount, as long as this is paid regularly, it is not under any obligation to redeem the shares. This is 100% compliant with Surah Al-Baqarah, verse 282, where it is stated, "Let him who incurs the liability dictate." That's Yusuf Ali translation. Since it is the government that has incurred the liability, it dictates the date of redemption. So what this boils down to this: the government borrows money. When the government borrows money with Esham, the government decides when to pay back. It dictates the date of redemption, and that is in 100% compliance with Surah Al-Baqarah, verse 282. Now, Esham, like Waqf, is also a very patient capital. For as long as the annuities are paid, as I said, a modest amount, annual amount, the entire capital collected from the public stays with the state. Investors cannot demand their money back. Thus, Esham solves definitively the mismatch of funds problem encountered by Islamic banks. It is therefore a far more potent instrument for mudaraba financing and therefore enhancing entrepreneurship and therefore enhancing and generating sustained economic growth. But we have the problem of how to invest Esham funds. This is the big question. How should the Esham funds collected by the state from the public be channeled to young entrepreneurs? A warning here, government bureaucrats must not, so this money is now controlled by the government, but the government bureaucrats must not be allowed to choose entrepreneurs due to two reasons: potential of corruption and lack of know-how. Bureaucrats don't know how to choose the correct entrepreneur. So there is a huge potential of corruption there. They may choose people they like for personal reasons. This must never be permitted. So the government bureaucrats must not be allowed to choose the entrepreneurs. The choosing must be done by venture capital professionals who have the know-how to choose the right entrepreneur. Funds collected through Esham should therefore be used for fund matching only. Now, let's come to the Esham venture capital synthesis. These funds must be invested utilizing venture capital, that is the mudaraba mode. So the money has been collected by ESAM, but it must be utilized through mudaraba or venture capital. Initial selection of the entrepreneur must be done through the venture capitalists. State involvement must be limited to fund matching only. The rate of 2/3 has been successfully applied. We have examples of this. In other words, if an entrepreneur is provided funds, if he's selected by a venture capitalist, and the venture capitalist provides X amount of funds to this entrepreneur, 2/3 of these funds can be additionally provided by the state using the ESAM funds. Now, in addition to supporting entrepreneurship, as I have just explained, ESAM shares can also be used for open market operations of Islamic central banks. Thus, in addition to Wakf of stocks, we also have ESAM. Both of these instruments provide patient capital for young entrepreneurs through mudaraba or venture capital. There is only one condition. Managers, whether of Wakfs or ESAM, leave identifying the promising entrepreneurs to venture capitalists and focus on fund matching only. The identification of the entrepreneurs must be done, I repeat, by venture capitalists, and Wakf or ESAM funds should be used for fund matching only. But this is not all. There is still more potential in Islamic finance, and this brings us to microfinance. So far, we have primarily focused on financing high-tech entrepreneurs. But microfinance also targets entrepreneurs with one difference. These entrepreneurs are usually very poor women. The original Islamic bank established by Ahmed al-Najjar in 1963 in Egypt, though never called as such, was the first ever microfinance institution. This was the famous Meet-Gamer experiment. Al-Najjar's main argument was that, given hope, even the poorest peasant can save. In his bank in Meet-Gamer, Egypt, he allowed local peasants to open mudaraba accounts with micro deposits. If these persons continued to invest regularly their meager savings and demonstrate their sustained saving behavior, they will be provided with micro capital in the form of mudaraba. Al-Najjar's bank flourished between 1963 and 1967 when it was closed down by the Egyptian dictator Jamal Abdel Nasser for purely political reasons. Thus, the first modern and genuinely Islamic bank functioning in both the liability and asset sides as multiple mudarabas, as well as the first Islamic microfinance institution, came to an end. This is a huge tragedy. It should have never happened. But although Najjar's bank was killed in Egypt, where it was born, the idea of microfinance resurfaced in Bangladesh under the leadership of Professor Muhammad Yunus. The Grameen Bank of Muhammad Yunus was established in 1974. Thus, the idea of microfinance was first envisaged by Al-Najjar, but successfully established by Yunus. But there is a substantial difference between the two. While Al-Najjar's bank operated as multiple mudarabas, the Grameen operates with microcredit. But Yunus is not to be blamed. When criticized by some for letting the Grameen operate with credit, hence interest, Yunus said, if only the government allowed, the Grameen can become Islamic overnight. This appears to be unrealistic, but it is actually true and quite simple. A brilliant idea, make the borrowers owners. Yunus has proposed to solve the riba problem, interest problem at Grameen, by distributing the bank's shares to borrowers pro rata, and thus making each one of them a shareholder. Thus, every time a person borrows microcredit from the Grameen, she pays interest actually to herself. Yunus obtained fatwas that this is not riba. The problem is the government. When Professor Yunus wanted to apply his idea, his hands were tied by the government of Bangladesh, and the Grameen remains a riba bank. But Yunus is not to be blamed. The government of Bangladesh is to be blamed. This, notwithstanding everything I've said so far, there is still room for optimism, because in the meantime, we have learned that a microfinance bank can successfully operate and that it can be Islamic, providing this problem with the shares is solved or not interfered with by the government. So I'm talking about a microfinance bank that is owned by the people who actually borrow from it. Another very important institution, a high potential Islamic public finance institution, is Tabung Haji. Tabung Haji was envisaged and established by the late Unku Abdul Aziz, a member of the royal family of Johor in Malaysia, and an economist at the University of Malaya in Kuala Lumpur. The year was 1963, the year of establishment of Tabung Haji. The modus operandi is very simple. Persons intending to save to perform the pilgrimage will deposit their small savings with Tabung Haji. When these savings reach the required amount, the TA would organize the entire pilgrimage for the depositor. It was envisaged that the plan would benefit savers as well as the national economy by enhancing aggregate savings. I remember having talked with Unku Abdulaziz, and I remember him telling me that I asked him exactly how this whole thing would benefit the savers exactly. And he said, look, in Malaysia, the peasants put their savings into bamboo sticks. These bamboo sticks can be stolen, can be burned, and are subject to all sorts of risks. And so thousands of people lose their savings, which they do to attend the pilgrimage, and depositing these savings into a solid institution certainly would benefit the savers. I remember him saying that. And of course, I agree with him. In the year it was established, that is in 1963, altogether 1,281 pilgrimage candidates deposited about 46,000 Malaysian ringgits of their savings with Tabung Haji. In the year 2009, this number reached at more than 5 million candidates who invested almost 900 million Malaysian ringgits. So this was, if this is not success, I wonder what is. We can now bring together all the points made so far in this graph. Now, please follow the cursor. We are talking about the entire Islamic finance industry.
Excuse me, Prof.
Hello?
We are not able to see the graph.
Oh dear. You are not able to see the graph?
Yeah, we cannot see your screen, in fact.
I don't know what I can do about. In that case, I will skip the graph and go to the explanation. Okay, I will explain the graph.
Prof, actually,
yes?
we cannot see your slides from the beginning. Are you sharing your slides?
You cannot see my what?
slides. Are you sharing your slides with us while you are presenting?
Yes.
Oh, I'm not sure about others, but I cannot see your slides.
Oh,
Yes, Prof. We cannot see your slide.
Yeah,
Oh dear.
yeah.
You mean you've been listening to me without the slide all this time?
Yes,
Yes,
yes.
yes.
So I thought you were okay.
Oh
Would be
dear.
good if you can share your slides so that we can follow better.
Well, I don't know what I can do about that. Well, anyway, let me continue like this. I'm not sure what I can do about that.
There is a share screen button, Prof, below in the bar below, in the bottom, I mean.
Just
in the bottom of the screen, there is a share screen button. Just nearby chat and Q&A.
Yeah.
Just click on that and select the screen that you want to share.
Can you see it now?
Not yet.
Efendim Hasan Basri. Ya çoktan ben biliyorum paper'ı ama they don't see my slides.
Ben bağlanayım hocam size bir.
Can you see it now?
Yes.
Yes, now we can see.
Oh,
Yes, we can see now. Yes, thank you.
For heaven's sake, I'm sorry about this.
Thank you, Prof.
Can you see the graph now?
Yes, we can.
Yes.
Okay. Sorry about this, but have you been following so far? I mean, is there any problem? Anyway, you can ask me any question that you like after a while. I'm about to finish. So we are talking about this Islamic, you can see the cursor now also.
Yes, Prof, we can.
Okay, now this is the Islamic finance industry in general. And in this sector, we have the private sector here. We have the Waqf sector, and we have the state sector here. Now, within the private sector, we have Islamic banks and venture capital. When I say venture capital here, you can also consider this part as entrepreneurs. Okay. Now, as I mentioned already, by changing some conditions, by imposing some rules and nudging the Islamic banks, some funds from the Islamic banks will come to entrepreneurs. As I mentioned before, this can be up to 20%. This can increase up to 20% of their annual investment portfolio if they increase their mudaraba and total investment share by 2% annually. Remember that? So through that link, that's why I put this link from Islamic banks to the entrepreneurs, to the venture capital. Then we have in the private sector, Naggar Yunus type microfinance, which I explained. This also provides funds to actually, this is also quite important. I should put I didn't put a arrow here because it's a very different type of finance, as I have explained. These are really microfinance, very small amounts, but they are given, they are distributed to millions of poor women in Bangladesh. It's an extremely successful institution. And so this originally envisaged by Naggar, but fully developed by Yunus, these funds are also very important funds to support lower level entrepreneurs, millions of very poor women. And then we have Tabung Haji. This does not actually provide funds for entrepreneurs, but helps saving millions of pilgrimage candidates And it is an important public finance institution because all these savings are accumulated within an institution, Tabung Haji, and these funds are invested by Tabung Haji. So this is also a very important institution. So we have on the private sector, we already have Islamic banks and Takaful functioning, but we have great potential for Islamic banks financing entrepreneurs through the nudging policy that I've suggested, microfinance and Tabung Haji. If we come to the Waqf sector, in the Waqf sector, I mentioned Waqf of stocks or other cash Waqfs. What established, these are special Waqfs, established with the purpose of financing entrepreneurs. Now, these funds provided either by cash Waqfs or by Waqf of stocks also accrue to entrepreneurs. That's why we have this arrow here. There are also real estate Waqfs. I did not mention them because they don't support direct entrepreneurs. The real source for entrepreneurial finance are cash Waqfs or Waqf of stocks, again, established with the purpose of supporting entrepreneurship. Finally, in the state sector, we have, I mentioned Sukuk. Now, there are projects trying to link Sukuk with stocks. I am against this because people do this who don't understand Waqfs properly. If you collect funds to establish a Sukuk via Waqf, in other words, if you use a Waqf to collect funds to establish Sukuk, when you redeem Sukuk, and every Sukuk must be redeemed at a certain date, then you must destroy the Waqf. You must relinquish the Waqf, and that is against Islamic law. So any attempt to combine Waqfs and Sukuk, in my opinion, is un-Islamic. It should not be done. It is tragically wrong. I'm very strongly against it. Actually, I am against Sukuk also, because the instruments that are used in Sukuk are not 100% Islamic. We are all aware of that. If you don't believe me, you can also read Taqi Osman, His Highness Taqi Osman, and many other Muslim thinkers who are also very critical of the instruments used by Sukuk. Instead of Sukuk, we must use Essam. If governments want to borrow from the public without interest, 100% Sharia compliant, then they must use Essam, not Sukuk. Moreover, Essam, this is for public finance only. This is for government borrowing only. But the government borrowing can also be used to finance entrepreneurship if the Essam funds collected are channeled to entrepreneurs through the venture capital sector, as I have mentioned. So this is the basic idea of the Islamic finance industry. As you can see, we have at the moment only this, we are aware of this here. Nagar Yunus type microfinance is at the moment un-Islamic. Tabung Haji, so we have 1, 2, 3 institutions operating so far, but we have the most important ones, the Waqf of stocks, Esham, and improved, reformed microfinance institutions, and the whole venture capital sector operating with Mudaraba are not there yet. That's why I argue that there is a huge potential for Islamic finance. It is just we must stop seeing Islamic finance as merely Islamic banking. Islamic banking constitutes merely the tip of the iceberg. Now, this is a summary and conclusion. Islamic finance is by no means limited to Islamic banks and their endless cat and mouse games within with the authorities. As you, if you are in the field, I am sure you know that there authorities get suspicious about certain instruments used by Islamic banks and put restrictions only for Islamic banks to invent another instrument, again, hiding the riba in it. So there has been an endless cat and mouse game within in the Islamic bank sector, and we don't have to be limited to these to the Islamic banks and their cat and mouse games. Maybe it's a strong word, cat and mouse game, but it's the reality. As you all know, there has been a movement from murabaha to organized murabaha to tawarruk, etc., etc. Then Islamic banks constitute only a small fraction of a fully developed Islamic finance industry. The Naggar Yunus type microfinance as well as Tabungaji have already proven their potential. Islamic venture capital, that is Islamic Mudaraba sector, can obtain funds from a modernized Waqf sector, from a revitalized Esham, as well as from the nudged Islamic banks. Esham can also revolutionize and transform government borrowing from sukuk-dominated quasi-Islamic to full Islamic norms. Open market operations of central banks can also be rescued from organized tawarruk, another quasi-Islamic institution, and can be conducted with Esham becoming truly Islamic in the process. Finally, government funds collected with Esham can be channeled to entrepreneurs via Yozma method, that means via venture capital method. But this Yozma method is well known among those who are in the field. Thank you for your patience, and I am ready for any question if you have.
Assalamu alaikum, Prof.
Alaikum salam.
Thank you very much for a very interesting presentation, excellent presentation. It is that I would like to get your further explanation on Isham that you mentioned just now.
Yes.
Okay, can you explain further what this concept means? Thank you.
It's a major institution. It has been invented way back. It is time tested also. It has been invented by the Ottoman government back in the 18th century, 1775 to be exact, and applied successfully. Basically, it operates like this. You have, as I said, you can read in detail about these things. I mentioned, let me go to that page. So meanwhile, you can, just a minute. Let me, just a minute. Yes. These are the sources that you can read on this. But I'll give you a very brief summary. Say the government has a normal tax source, a source that gives regularly, say, $1 million, let's say. It generates $1 million of tax revenue annually. The government allocates a small fraction of this, let's say 400,000, and then puts it aside. And then it securitizes this 400,000 reserved money, in the sense that it divides it into equal parts and sells it in equal parts, securitizes, sells it to the members of the public for a multiple, of course, of the annuity that it will yield to the investors. And 10 times, 20 times, whatever, that is not fixed. That is decided according to the economic conjuncture. And then it only pays every year this 400,000, distributing it pro rata to the investors. But in the meanwhile, it has collected, it has sold this revenue at multiple times to the members of the public. And to give you the historical example, the Istanbul customs yielded in 18th century 1 million gurush a year. The government allocated 400,000 of this for some transactions and sold it, securitized it, and obtained 2.5 million gurush. 2.5 million gurush, and it continued to pay every year 400,000 to the investors. And it decided to redeem the money, this 2.5 million gurush, when it suited the government. This is how it works. And I have, in these sources that you can see on the screen, on the slide, I have examined the Islamicity of this instrument, whether it was actually compliant to Islam or not. And as I already mentioned, it follows Surat al-Baqarah 100%. Okay, I hope that's clear. Again, if you want, if you are really interested in this, you can read these sources. The book itself, it can be quite expensive, but you can enter into my page in Academia Edu, and you will find there a number of articles on Essam in English, which you can download free of charge.
Thank you very much, Prof. Thank you.
Okay. Any other question?
Thank you, Prof. Walaikum salam.
Alaikum salam. Yeah.
Habibullah from IUM, IBF. I just want you, maybe if you can elaborate more on, you mentioned about sukuk and sukuk with waqaf.
Yes.
Yeah, and then I think you observed that it might not be Sharia compliant.
Yes.
Maybe if you can elaborate more on this aspect.
Yeah.
Thank you, Prof.
Sure. Thank you for asking me this question. Thank you for giving me the opportunity to explain it in more detail. As I said, I am strongly against it for the simple. It's a very simple reason. You see, what people do when they want to. This is particularly so. There is a particular example in New Zealand. They have. It started there. And Muslims in New Zealand wanted to establish, with all good intentions, they wanted to establish a sukuk and organize the millions of sheep that are sacrificed during the pilgrimage, the Qurban, as you all know, I'm sure. So, but they needed cash to be able to do this at very large scale. And they obtained the cash through a waqf. First, they established a waqf, and people donated to the waqf, and then they use this money to establish the sukuk. The problem is, when you collect money with waqf, with donations made to the waqf, this is supposed to be perpetual. The waqf is supposed to function in perpetuity. Waqf is not something for short term, it is for forever. That's why we have hundreds of wakfs all over the Islamic world, which have been functioning for centuries, for 1,000 years. So that is what wakf is all about. It's a perpetual institution. But when you use the wakf funds to pay for redeeming the sukuk at a certain date in the future, then you are establishing a temporary wakf, not a perpetual wakf. In the Malikis permit temporary wakfs, but Hanafis don't, and all the other schools don't. So if you are Maliki, you can do it, I suppose. But still, you have to be aware that you are killing an institution, a wonderful institution like wakf, which is supposed to be perpetual. If you want to establish sukuk with donations, with how do you say, with what is the word for it now? With contribution of millions of people, then it is much better to use ESAM, because with ESAM you don't have to pay back the principal. Remember, you only pay the annuity. You don't have to pay back the principal for as long as you are paying the annuity. That's why it is much better to collect funds with ESAM and do the major investment that you need than with combining wakf and sukuk. I hope that's clear now. Is that clear? Is there another question?
Thank you, Prof. Okay. Thank you.
Okay. Any other questions so far? Okay, then I stop, and we now I am the moderator now. I have stopped giving the paper, and I will now I will moderate the panel, and we start with it is now 10:25. Okay, we start with Aulia Rahimi. Are you there, or Aulia Rahimi? I don't hear anything from Aulia. Okay, I go to next person, Ananda Ramadani, but she informed us that she won't be participating. So I go to next person, Habibullah Zakaria. Habibullah, yeah, I can see your face, Habibullah. Okay. Well, the floor is yours.
Okay, Bismillahirrahmanirrahim. Thank you, Prof, for giving me this opportunity. And thank for university for initiating this platform to discuss issue pertaining to Islamic banking and finance. My presentation will be on exploring consumer perspective of Takaful in Turkey, which is written by Muhammad Serhat and also supervised by myself. Brother Muhammad Serhat, of course, is Turkish, and he will not be able to attend today's session. That's why I'm presenting on his behalf. For background of the study, looking to population of Turkey, whereby we have more than 83 million population, and more than 95% are Muslims. Means that those who can appreciate the takaful industry in Turkey are many. Also, according to IMF's data, 2020, Turkey is considered as in the 18th largest economy in the world, with a GDP size of 754.412 billion at current prices. However, when we look at the takaful penetration in Turkey is very less. It's only 50% of the market. So this study is more to see and examine Turkish takaful system, and also to evaluate or to examine or to know the level of awareness of customer with the rate of takaful industry in the country, and also to understand to how much information the public or Turkish have about takaful, and also to investigate whether Turkish and people are aware and are willing to use takaful product if they are well informed. Problem statement, when we, with the literature review that we already presented it, I think in the full page. So based on the literature review, we came up with the problem statement. Because we find that the customer in Turkey have low level of awareness compared to conventional insurance, which we feel that is not really Sharia compliant. And of course, the takaful industry just emerged, and less than 2 decades, about 12 to 15 years old. Also, there are few takaful companies and agencies in Turkey. Of course, I will be using takaful for Islamic insurance, and also for conventional, we will use conventional insurance. Conventional insurance seems to be more reliable for the public as far as Turkey is concerned. So the state has implemented law on the takaful system lately, which when we compare it with conventional insurance, we see that takaful is we can say is new baby, is still in infant stage. Also, there is no much maybe concentration from researcher on the, knowing the level of understanding and the penetration of the takaful industry in Turkey. So the objective, number one, is to examine to what extent Turkish people know about the takaful system or takaful industry, and to determine customer perspective of takaful in Turkey, and also to examine the tendency of consumers with high religious sensitivity to prefer takaful industry in Turkey, and also to examine the awareness consumer in Turkey. Of course, as we mentioned in the background, when we say that Turkey is one of the Muslim largest population, more than 95%, but the level of awareness is very low. So based on the research, we recommended setting a few recommendations. Inshallah, later I will. So this significance of this research will be number one, because we not enough literature in this aspect. So, the study will enrich the literature in this aspect. Also, it's also good for takaful operator to know that people are in need of more awareness and the level of understanding, and also the readiness, the level of the readiness. It's also good regulators, because knowing the market and knowing the customers will give them an able opportunity to have very good strategy in order for Takaful to have a high penetration. So I don't want to go in detail because I don't know how much time I have. But when we compare Takaful and conventional insurance, we see that there are a lot of differences between two systems. Takaful is more the part of tabarru, whereby conventional insurance is more to muawada. So when we have these two systems, we know that muawada, of course, based on Siddiqui, because the conventional insurance is muawada, so the element of gara is there, and the element of maisir also there, and whether riba of day, which is more to debt, also riba al-mu'amalat, we have two types of riba. So garar is uncertainty, maisir is gambling. So these three elements which are Sharia compliant, we cannot find in Takaful industry. So also we have a few models that we use in Takaful. After the first layer, which is to tabarru, we have wakal model, we have waqaf model, we have mudaraba model. But in the market, we see that perhaps wakala bil istifmar is more applicable, because for mudaraba, which is more to share the profit, we have some and difficulties in order to use. However, when we go for hybrid, perhaps mudaraba also used together with other models. So these are the comparisons that we do in terms of Sharia compliant. So in terms of the akad that we use, in terms of how we mitigate the risk management. So there is risk sharing, and also there is risk transferring. In insurance, it's more to risk transferring, whereby in Takaful, it's more to risk sharing, because we base it on ta'awun, which is mutual assistance. For development, of course, I will not go through it, but when we look at the Takaful, we see that it started Sudan, also Malaysia, and many more countries, such as Egypt, Algeria, Iran, Turkey, Saudi Arabia, and so on and so forth. But Takaful in Turkey is very, we can say that it's still in the infant stage. Why? Because when we look at the regulation and the law of Takaful in Turkey, we see that it's very recent. So in 2009, Takaful activity began in Turkey. In 2017, the ministry that is concerned about this, they managed to pass the regulation on the principle and procedure of operation of Takaful. In 2018, when looking at the numerical data on Takaful, the total premium production of Islamic insurance, which is Takaful, in 2018 was 2.232 Turkey lira million, which an increase of 69.6% from the previous year. By the inflation factors is taken into account, the real growth rate is approximately 41%. About 73% of located Takaful premium was car, which is more to compulsory and traffic, compulsory traffic, and also based on association 2018. As of 2019, a total of 9 are operating in the takaful sector in Turkey, including 9 of non-life branches and 5 of life or retirement branches. Okay, go. For data collection, researchers use a questionnaire. So quantitative research is applied because we want to examine the consumers' level of understanding and then awareness and also readiness to take takaful product. We use survey method in order to collect the data. Also, we use demographic information, 20 statement also measure. Target population is above 18 years old, which are living in Turkey. Also, let me go for, okay, demographic. I think just to highlight for demographic, when we look at the age, you see that 48% of those who answer the questionnaire are between 26 to 40 years old, which we feel that their level of understanding is supposed to be much more better than others, because this level they are we can conclude that they are the level of their education means that they already finished secondary school. Okay, so maybe university, and so some of them that they are working. Male 73%, okay, compared to female, and here, which is the officers, those who are working, we see that the 45%, 45.6%. Of course, this because it's, the questionnaire was designed in Turkish language so that people will really understand, and then they can give accurate information. Okay, when we see the level of education, you see, for level of education, 61% university graduates, which when we analyze, we see that, of course, if those who are in this stage or this level of education, they don't know much about takaful, talk less of those who are in maybe primary, secondary school student. Okay. Okay, based on our assessment, I'm sorry if I take much time. So based on the assessment, we have few questions. Okay, so 72% of respondents are concerned that conventional insurance is not Sharia compliant. So they know that it's not Sharia compliant, but the same 72% participants have little information about takaful product, and they prefer takaful over conventional insurance, and they are willing to if they are really well informed. Also, many people are not comfortable with the fact that conventional insurance are not Sharia compliant. So they prefer to have Sharia compliant because when we look at the religiosity and people are really concerned about something which halal or not halal. In the first statement of I have insured property, I think if the takaful system is introduced effectively, it is share in the sector will increase. 47% of respondents agree with the statement that currently have insured that they have currently have insured products, and 82.4% of the respondents believe that takaful share in the sector will increase when it's sufficiently introduced. This is more to regulators and takaful industry in the Turkish market if this information might be very useful for them in order to strategize. People who insure their product may prefer takaful, especially people who care about insuring their product. Think that takaful may have a significant opportunity to increase its share in the sector because people do not have any prejudice against takaful. Also, when we look, examine the level of education, you see that according to survey, the educational level of the participants are quite high because they are graduates, university students, and beyond. So those who disagree with the statement of I have knowledge about takaful are around 43%. Whereas those who answer that they have knowledge, they are 37% of the participants, which we feel that the high or low level of education of participants is not really related to their knowledge of takaful. If their awareness might be can be increased in order to solve this problem. Also, 86.4% of respondents agree that the takaful system is not adequately introduced in Turkey. Perhaps because it's recently introduced, and perhaps the awareness is not really in place, it's not really effectively in place. And also, we 82.4% of the respondents agree that the takaful system is introduced effectively. Okay, going through the analysis, I already done, but just to do the analysis, 76% of consumers would like to have government support. I think this is not only about takaful, but many sectors as well, even in the maybe wakaf, zakah, having government support will actually increase, number one, in the awareness. Number two, people will be very informed about the subject matter or about the product. And also they might have the issue of transparency, the other issue that might affect the penetration will be also arise. 45% of the respondents answered that they disagree with the statement that I think that the takaful system is used around me. So perhaps they are not aware, about the takaful product in their surrounding. And one of the reasons that takaful is behind conventional insurance is that the number of agencies are very low. So 64% of respondents replied that they agree with the statement. So to conclude, we have several conclusions for this research. It was found that consumers in Turkey do not have enough knowledge about takaful product. Also, we found that the vast majority of customers are not aware of situation where conventional insurance is not complying with Sharia. Also, consumers do not have a bias about takaful sector, and they can consider takaful when they insure their property and asset. It was also found that customers with high religiosity, is that the level of their religiosity is very high, are more willing to prefer and more willing to adopt and accept the takaful system. Also, if the takaful system is well introduced, the share in the will increase. For consumers who believe that the takaful system is in accordance with Sharia and is different from conventional insurance, it is easier for them to choose takaful and to prefer takaful over conventional insurance. Although consumers have a very high of the level of education is very high, they do not have enough knowledge about takaful. Also, and the last is consumers who care about insuring their property are also potential customer for takaful company. So I think penetration, the level of penetration might be also increased if the level of awareness and level of education are increased. So we have a few recommendations for takaful operators, company, and also for regulator. For takaful, company should inform customer about importance and significance issues such as the emergence of takaful system, the operation, and the difference between takaful and conventional insurance. Takaful company also should first attract the attention of customers by providing advertisement through social media and other effective media that most of us, we maybe daily basis or weekly basis, we go through. Also, conference and seminar also can be organized to actually also together with university and colleges so that we can promote the takaful product. The takaful company can make insurance agreement with conventional bank as they do with Islamic bank. So maybe window can be, maybe the researcher is talking about the windows. So takaful company proved that they can reach consumer more efficiency by increasing the number of agents. Consumer will be more likely to choose takaful. Another important that takaful company can do is to train, and I think training, and so that the issue of sustainability will be there, and also human capital. Also, the issue of human capital can be solved. In order for takaful sector to develop and increase its share in the sector, the takaful company also must be established, which perhaps the capital will be more. So many agencies, including government support, will be very appreciated. With a mobile app, it can provide fast and effortless access for consumer by enabling customers to insure their property with the takaful company. In future study, the takaful system in Turkey can be examined from the point of view of the takaful company. Challenges experienced by takaful company in the sector can be also discussed, and suggestions for solution can be also presented. Thank you for giving us this opportunity. Wabillahi taufiq wal hidayah. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Habibullah, for this excellent paper. I have just one point to add. Can you hear me?
Yes, yes, Prof. I can hear you clearly.
Just one point I want to add. In the Muslims in this country, the devoted Muslims in this country had several very negative experiences. A number of companies have been established in this country claiming that they are Islamic, and they appealed to the pious Muslims in this country, and they these people who invested with them were very badly treated, and they lost their money. They were cheated. So with this negative experience, it is difficult to persuade the public. So I will, your paper was excellent. It's just that I would add that state support is also necessary. State needs to make it very clear and obvious that it is behind the takaful system. You mentioned already re-takaful, of course, that's surely that's very important, but a government commitment, I would say, is also very important. Okay, thank you for this paper.
Thank you, Prof. Inshallah, we will put it into consideration. Thank you, Prof.
Thank you. It's just a small suggestion. The next person is Mohammed Hamza Gawri. Are you there, Mohammed Hamza?
Yes, I'm here, Prof.
Okay, the floor is yours then. 15 minutes.
Okay. Thank you very much.
Okay.
Can you see my screen now? Can you see my screen?
Yes, I can. Yeah.
Okay. Okay, first of all, thank you very much, Prof. Also, I would like to thank the audience and also a special thank to the co-speakers of this session. MashaAllah, I can see some of my lecturers and professors. This paper will be presented by me, Mohammed Hamza Ghauri, and my co-authors are Prof. Sayyid Qasim and Mr. Hamid Rashid. The paper is entitled Waqf-Linked Microfinance Using Commodity Murabaha as a Business Enabler in Post-Pandemic Economy. So the presentation will be as follows. After an introduction, I will discuss the methodology. Also, the literature review related to financial inclusion through Islamic social finance, the role of commodity murabaha, the fintech potential to develop Islamic social finance, and I will be presenting a case study of HAL microfinance, and also proposing or suggesting a new model which is based on HAL microfinance, which will be an enhanced model. And finally, the conclusion. So, just as a background of the study, microenterprises play a crucial role in developed and developing economies. They contribute mainly to poverty reduction, provision of goods and services adapted to the local need. They contribute into increasing employment, and they improve the, they encourage wealth creation and redistribution. Their role can be measured in terms of different scales, such as social, economic, and even political. Over the past decades, the problem of access to external finance by micro enterprises has been one of the main concerns of academic researchers and practitioners. In order to achieve financial inclusion, many conventional and social finance institutions provide loans and charge interest rate for the client. In most cases, this interest rate is higher than the one charged by banks, considering the high default risk of the client. Granting loans at very high interest rate does not really help small and micro enterprises to develop their business and increase their income. This makes it even more difficult for the borrower to discharge all of his financial obligations. Charging a high interest rate is a burden on them, since they have to pay back their loans plus a high interest rate, whether they got a profit or a loss. The debate over this has scaled up with the economic downturn caused by the pandemic. To this paper, we study the case of HAL microfinance as a Sharia-compliant microfinance provider through an innovative business model and using a range of Sharia-compliant products. HAL microfinance has developed a unique business-to-business finance model that provides finance to small and micro shops. So this is a conceptual paper which is based on literature review and the case study of HAL microfinance. Islamic microfinance refers to a set of institutions and services that provide Sharia-compliant financial products and services to people who are not able to access banking services due to their low income. Within the Islamic microfinance frame, institutions offer microfinance by establishing a Sharia-compliant relationship between borrowers and donors. These relationships are established through various contracts such as lease, partnership, benevolent loan contracts such as Qard Hasan, commodity murabaha, or other Islamic social finance products such as waqf, zakat, sadaqah, and so on. Waqf particularly has been historically successful in its contribution to socio-economic development. In the golden age of Islam, the institution of waqf played an important role in the evaluation of society, in particular through the reduction of poverty. The concept of cash waqf has widened the scope of waqf since it allows donations of waqf in money and other movable properties. The contributions after the introduction of cash waqf are no longer limited to wealthy, since donations can be made at any amount in cash. Murabaha, from its side, is an effective transaction in which a real economy need is satisfied by the Islamic bank by first purchasing the required item and then selling it to the consumer for a declared cost and profit to be paid over a period of time. But in commodity murabaha, another stage of the transaction is introduced, whereby the customer sells the commodity for money. The surplus or the cost markup or the markup on the basic product murabaha is permitted on the ground that time has a share of the price. Commodity murabaha is considered as one of the tools that increase the source of capital of Islamic finance facilities. It is widely used in Malaysia and Saudi Arabia, which are two of the largest Islamic financial markets. Commodity murabaha was introduced in Malaysia as an initiative of Bank Negara to support Islamic financial institutions to facilitate liquidity management and investment. According to ISRA in 2016, it represents approximately or between 750 and 800 billion USD in Islamic finance asset around the world. The commodity murabaha model is as follow. When the customer express a need for finance, let's say for example 1,000 USD for a consumption need rather than to purchase an asset, he will approach his bank. The bank buys a commodity from a vendor, let's say for 1,000 USD in cash, and the bank in a third step will sell the commodity on credit to the same day to the customer for 1,200 USD payable in a certain period, assuming that it will be a year. In a fourth step, the customer sells the commodity to a third party, supplier B, for the market price, which is 1,000 USD. The net result is that the customer receives 1,000 USD cash, while the bank has a claim of 1,200 USD on the customer that must be paid after 1 year. This transaction had been made easier with the introduction of technology. With the emergence of fintech, the fintech has changed the landscape of the global financial industry. Fintech is the result of a combination of financial services and technologies, while Islamic fintech is defined as an innovative financial industry that uses technology to improve financial businesses that deliver Sharia compliant products and services. In line with the growth of Islamic finance globally, fintech has opened up significant opportunities for Islamic finance practices around the world. As the size of funding provided by clients to clients by microfinance institutions is smaller, the high fixed cost of credit analysis, documentation, and Sharia compliance are difficult to cover while realizing a competitive markup in the market, especially through a brick and mortar model. Financial technologies present, in this case, a vital opportunity for Islamic microfinance for enhancing efficiency and competitiveness and organizing effectively its administrative procedures. Digital microfinance systems are seen as the solution to many microfinance key challenges. And HAL microfinance is regarded to be one of these solutions. HAL microfinance was designed to address the traditional challenges of microfinance in a feasible and Sharia compliant manner to contribute to financial inclusion through access to finance for all. HAL microfinance saw an opportunity with a supply chain platform that connects shops to suppliers through a mobile app. HAL does not provide funding directly. It partners with the supply chain platform because of its high transaction value and large consumer base. Through the supply chains app, stores submit orders to different suppliers and wholesalers and pay using an electronic wallet. HAL microfinance model is a microfinance initiative that provides short-term facilities to licensed stores. Businesses can apply for funding as low as 10 USD and repay within a time frame that can vary from 1 to 54 weeks. In order to requalify for additional financing, customers must make all overdue payments to raise their credit score to a suitable level. If there are any delinquencies from a customer, he will not be eligible for additional funding. The ecosystem in which HAL operates is presented as follows. The customer, after fulfilling the registration requirements and going through a KYC process, he will log into his account in the supply chain platform. He will choose the products that he wants to purchase. At the payment step, he will choose pay through HAL. Also, during this step, he will be signing a Wakala agreement with HAL microfinance. In the second step, HAL receives the financing request from the shop through the platform and study the client request. HAL releases Qad Hasan to pay the supplier on behalf of the client. HAL pay the supplier via a payment gateway. At the same time, the client request is put into a pool of requests for commodity murabaha. In step number 4, HAL sends an order to its agent to trade commodity murabaha of an amount equivalent to the order received in a certain period. In step number 5, the client receives the goods that he have ordered from the supply chain platform. In the step number 6, HAL receives funds related to the commodity murabaha trade. Step number 7, the client pays HAL through a payment gateway. How microfinance aims through this model to provide shops with an opportunity to grow and enable entrepreneurs to thrive and achieve sustainable and self-reliant lifestyle. The use of blockchain as a single source of truth is to store contract digitally signed by users, store their ID, and establish credit scoring. Blockchain technology will be used for the automation of the funding cycle through smart contracts. Artificial intelligence in this model can be used in screening and tracing clients, as well as giving credit scoring based on their past behavior. To manage the credit risk, the risk of non-performing loans or credit risk, and increase the probability of repayment, HAL engineers were able to design an artificial intelligence-based algorithm to assign scoring to shops based on their transaction history with the supply chain platform. The credit rating is linked to a threshold of funding that a shop can request. The higher the credit score, the higher the funding limits. In this paper, we would like to enhance or develop more the model of HAL microfinance, as for the moment, HAL is only using some private funds to make this operation. But in this model, we suggest to enhance HAL microfinance by introducing cash work as a source of funds to sustain the microfinance activity and expand the reach of beneficiaries. Waqf remains one of the powerful instruments which tackle modern socioeconomic problem in the society, and it helps to redistribute wealth and offer a huge opportunity to reduce poverty and help people to live in dignity. So we see an opportunity for the cash waqf to be used in this model. The waqf-linked microfinance using commodity murabaha model is presented as follows. In the first step, HAL collects cash waqf, whether perpetual or temporary. In the second step, client applies for funding. They will go through a KYC process and sign all the necessary agreements. In the third step, HAL releases cash Qad Hasan to pay the supplier on behalf of the client through a payment gateway. At the same time, the application of the client triggers a request to HAL's agent to trade commodity murabaha. In the fourth step, clients receive goods. The fifth step, HAL receives funds related to commodity murabaha. Commodity murabaha automatically writes off the Qad Hasan already released. In the step number 6, the user reimburses with a markup or an admin fees. In the step number 7, which is the last one, HAL reimburse waqif in the case of a temporary cash waqf. HAL Capital offers an innovative, unique, and Sharia-compliant financing agreement combining wakala, Qad Hasan, and commodity murabaha. This model allows the shop owners to have the funds to purchase the merchandise needed to rotate their inventory through wholesale purchases. Once they have sold the merchandise at retail, they will make a profit and have enough income to repay their financial commitments. To sum up, in this study, we discussed the microfinance solution provided by HAL Microfinance to provide professionals or the shop owners with the liquidity required to rotate their stock and maintain their business. The financial services like HAL Microfinance are much needed solutions by micro enterprises, especially during this difficult era. This microfinance initiative was born out of the urgent need for an alternative model that could improve the performance of micro enterprises in obtaining financial services. This initiative is expected to be extremely beneficial in serving communities by boosting trade. To make HAL Microfinance more sustainable, we have suggested to include cash waqf as fundraising instrument. By using cash waqf, whether perpetual or temporary, HAL Microfinance will be able to maintain the sustainability of its microfinance business and even expand its reach. We believe through this model that the enhanced model will be a catalyst for micro enterprises in the post-pandemic economy. With this, my presentation comes to its end. Thank you very much for your attention.
Thank you, Hamza. This was a very interesting paper combining murabaha and waqf. It's quite an interesting contribution. Thank you. Any questions? If not, I'm moving to Rusni Binti Hassan. Are you here?
Yes, I'm here, Prof. Thank you very much. But the paper will be presented by my co-author, Nur Asila Azmi. She's here as well.
Okay, 15 minutes.
Okay, can everyone see my slides?
Yes.
Okay. Okay, Assalamualaikum warahmatullahi wabarakatuh. I'm Asila. Firstly, thank you to organizer for giving me opportunity to share my idea. And also thank you for Prof. Husni and all presenter and participants. So today I'm going to present a part of my research about the determination of important components in measuring Sharia governance practices. So this is outlines of my presentation. We start with the introduction and on the regulation, supervision, and governance from Malaysia perspective. And also I will discuss about the Sharia governance mechanism and also Islamic accountability theory and Sharia governance, and comes into conclusion. Okay, as for the introduction, as we know that the growth of Islamic finance industry, Okay, so the growth of Islamic finance industry in the past few decades becomes a signal that we need an additional layer of governance from existing corporate governance, which in turn where the Sharia governance comes into a picture. In order to make the application of Sharia.
Nora Asila, I have a
yes?
question. This is supposed to be a paper by Rusi Binti Hassan.
Yeah.
Are you giving this paper instead of her?
Pardon?
Yes, Prof. I'm Rusni. I have already communicated with the organizer that the paper will be presented by
Are you Rusi Binti Hassan?
I'm presented on behalf of Prof. Rusni. On
behalf of her. Okay, so I'm sorry. Okay.
Okay, I will start the introduction. Okay. Okay.
Go ahead. It's okay. Go ahead. Sorry.
Okay. It's okay. Okay. As we know that the growth of Islamic finance industry in the past few decades become a signal that we need an additional layer of governance from existing corporate governance, which in turn where Sharia governance comes into a picture. This is because in order to make sure that the application of Sharia principles in this industry, and in the context of Islamic financial institutions, the goal of corporate governance is broadened from conventional, where it extends the relationship between humanity, which to serve the right of other stakeholders, and most importantly, to obey and preserve the relationship with the creator, which is Allah. And the Sharia principles incorporated into the business transactions, financial products, and the contracts provided by the Islamic banks, and make them significantly more complex than their conventional counterpart. This corporate governance, as we can see, it is not suitable to be applied in Islamic financial institutions. And Sharia governance becomes an effective tool in ensuring business transactions and the operation of Islamic banking are Sharia compliant and critical to the long-term viability of Islamic banking industry. And one of the important mechanism in Sharia governance practices is the inclusion of Sharia supervisory board. However, there are few other elements which is important in order to measure the Sharia governance practices. Therefore, this paper would like to highlight a few important mechanisms of Sharia governance and propose to have a comprehensive Sharia governance practices index in order to measure the implementation of Sharia governance practices in Malaysia. So before we proceed to the component in the Sharia governance, I would like to explain about the regulatory aspect in Malaysia perspective, whereby in Malaysia, the authority through Bank Negara Malaysia or Central Bank of Malaysia have taken a proactive role by introducing Sharia governance guidelines, including Islamic Financial Services Act 2013, and also Sharia Governance Framework 2010, and the latest one is a Sharia Governance Policy Document 2019. So by having this guideline, the Sharia governance guidelines are supposed to support the development of Sharia governance practices, especially by Islamic financial institutions in Malaysia. We will talk about the first act first, okay, Islamic Financial Services Act 2013. So this act is issued by Bank Negara Malaysia on 22nd of March 2013, with the main objective is to promote financial stability and compliance with Sharia. Under this act, the rule that related to Sharia governance is provided in Part 4, Division 2 of the Statute under Section 30 until Section 36. So I already summarized, okay, what the summarization for each section in Islamic Financial Services Act, whereby you can see that under Section 30, there are requirements for the institutions to establish their own or their internal Sharia committee. Under Section 31, they provide a specific requirement pertaining to the appointment of Sharia committee members. Under Section 32, they highlight the responsibility to the Sharia compliant, which is not only lies within the Sharia committee, but also the responsibility of Sharia compliant must be carried on the hands of board of director and also senior management of that institutions. While Section 33 and 34 require the institution to continuously update the BNM on the SC members. And Section 35 provide what are the information needs to be provided by the institutions to ensure that Sharia committee can exercise their duties. And Section 36 highlights on the confidentiality of informations by Sharia committee members. Okay, so we look on the Sharia governance framework in Malaysia perspective. Basically, for the Sharia governance framework, in order to support the Islamic finance industry in a more structured manner, BNM has issued a Sharia governance framework with the main objective is to safeguard the effective functioning of the Islamic finance industry and to promote its integrity. So the first issue of Sharia governance framework in 2010, and based on a Sharia governance framework, okay, this 2010, and based on Sharia governance framework 2010, a robust and sound Sharia governance framework is reflected by a competent and accountable Sharia committee, effective and responsible board and management, supported by active Sharia review, a strong Sharia research capacity, and monitored through Sharia audit and risk management function. So this is the suggestion by Sharia governance frameworks in order to have a good Sharia governance practices. Then the Sharia governance framework also outlines the roles and the responsibility of the three main organs in an organization, such as a board of director, management, and also Sharia committee. And also, it is suggested by the Sharia governance framework that in order to have a good implementation, it must be supported by four functions, which is a Sharia review function, Sharia audit function, Sharia risk management function, and also Sharia research function. So the effectiveness of a Sharia governance framework will encourage stakeholder confidence and promote the high integrity in the Islamic finance industry. There's accountability for the implementation of the decision and opinion in Islamic financial institutions. Then in 2019, the Sharia governance framework further improvised, okay, whereby BNM issued another framework, actually from the original one, but they improvised certain aspect. Then they call this framework as a Sharia Governance Policy Document 2019. So I also provide the differences between these two frameworks. Okay, So as we can see here, it is not much differ from the original one, whereby in Sharia Governance Policy Document 2019, they stress more on the responsibility of the board of director and also the responsibility of the management, whereby both of these organs of governance need to have a continuous development on Sharia knowledge. And at the same time, in Sharia Governance Framework 2010, they outline 4 functions, whereby we have a Sharia review, Sharia audit, Sharia risk management, and Sharia research function, whereby under SGPD 2019, Sharia research function merged with the secretariat to Sharia committee. It is not outlined under control function, but it is also part, it is still part under Sharia governance. Okay, and it is not much differ between these two guidelines. And also in terms of the appointment, station and disqualification of Sharia committee, for the Sharia governance policy document, they already discussed in details about the tenure, whereby each Sharia committee cannot be more than 9 years provide their service in the same Islamic financial institution, whereby in SGF 2010, they only discuss in general. And then in SGPD 2019, they improvise in terms of the Sharia committee meeting, whereby they include on non-physical meeting as well. They are concerned about non-physical meeting as well. So this one is also sourced from Commonwealth Model 2020. So both of that guidelines become important guidelines in order to support the Sharia governance practices in Malaysia. Okay, comes into Sharia governance mechanism. So this mechanism is basically based on what have been outlined in Indian guideline, whereby we have a Sharia supervisory board, board of directors, management, Sharia research, Sharia review, Sharia risk management, Sharia audit, and Sharia research. It is suggested by the guidelines that by having this important mechanism, it is expected to have a good Sharia governance practices in Islamic financial institutions in Malaysia. So let us look one by one about this mechanism. Okay, as we know, for the Sharia Supervisory Board, it become a main mechanism which made up the Sharia governance system. And Sharia Supervisory Board become a backbone to the Islamic financial institutions, whereby their main responsibility is to make sure that the Islamic financial institutions are fully compliant with Sharia. And they also responsible to provide guidelines, to provide a supervision, to provide a control of compliance with Sharia rules and principles, and also in the operation and transaction of the Islamic banks. And according to Hassan, Sharia Supervisory Board is the most critical elements of the Sharia governance system and has a greatest impact on the regular operation of the Islamic banks. So this is the main mechanism which is important in a Sharia governance system. So based on Grace and Pellegrini 2006, an effective Sharia Supervisory Board must demonstrate their competence, their accountability, and also the transparency, and supported by a strong guidelines and legal framework.
Five minutes, please.
In order to have enforcement and ensure the implementation. Okay, so for the Malaysian perspective, there are two levels. Okay, there are two levels implementation of Sharia governance, whereby we have at national level, SAC at central bank, and second level at national level, which is each Islamic financial institution must have their own Sharia committee. Okay. So comes to the next main mechanism, which is board of director. As we know, board of director become ultimate decision making in an organization, and due to that, this has become an important part in order to include under Sharia governance component in order to measure the Sharia governance practices, as they are the highest authority to set the policy and procedure in Islamic financial institutions. Okay. So I'll move to the next, which is a management. Become one of the another important mechanism in Sharia governance practices, because as we know, management, the role of management in institution is to execute any decision making what have been done by the BOD and by the Sharia committee. So they are responsible to make sure that decision making are effectively implemented in order to make sure full Sharia compliant. So SGF 2010 already outlined the responsibility of the management here, and we have a limit of time, so I will not discuss on this part. And as I said earlier, in order to have good Sharia governance practices, the Sharia governance system in Islamic financial institution must also supported by 4 functions, which is Sharia risk management. Okay, as we know, for the Islamic financial institution, Sharia risk will bring financial loss. Okay, Sharia risk can be defined as a financial loss to the Islamic financial institutions that may suffer as a result of non-compliance with Sharia principles. So the function of this Sharia risk management is to identify, to measure, to monitor, to control of Sharia non-compliant risks in order to mitigate any possible of non-compliant events. Even though the risk cannot be eliminated, but the role of Sharia risk is very crucial in order to mitigate the non-compliance. Okay. So next, among other control function is a Sharia review. The scope of Sharia review cover overall business operations, include from product structuring until product offering. So it is recommended by the SGF 2010 as one of important governance practice mechanism in order to control all activities in IFIs. And further, SGPD 2019 emphasized that Sharia review also responsible to make sure educate guidance in to the officer in order to make sure they keep updating the key governance organ about the latest development in legal and regulatory requirement in Islamic finance. So as stated by Besar et al. 2009, as the Islamic banking industry becomes more complex and competitive, it is high possibility to have a Sharia non-compliant contracts or transaction. This Sharia review function become important parts in Sharia governance in Islamic financial institutions. And then about the Sharia audits, okay, this is among another function that we have to include in order to measure the Sharia governance practices, whereby the Sharia audit cover all aspects in Islamic financial institution based on the Islamic value, and the existence of this function add a value to the role of the Islamic financial institution Sharia committee. So for the Sharia audit, actually it is essential in providing a public assurance on product of IFIs in order to get a public confidence toward product in Islamic financial institutions. So become important component in Sharia governance practices. Okay. And the last one is a Sharia research, whereby the responsibility of Sharia research function is to conduct research about Sharia issues, to provide information in order to do a decision making, to assist Sharia committee to do a decision making. So this is also become a main component in Sharia governance framework, okay, in order to measure the Sharia governance practices. Okay, so for the Islamic accountability theory, okay, I will skip in the context of Islamic perspective, whereby the accountability itself is not only we responsible to one part, but we also responsible to Allah. Okay, and in the context of business enterprise, both management and the provider capital are accountable for their actions within and outside the firm.
Your time is up. Please wrap up.
Okay, so based on the discussion, as I mentioned, as outlines that few important governance mechanism in order to measure the Sharia governance practices, my conclusion is that it is very important that we must assess the current Sharia governance practices, because we do not know either it is effectively implemented or not. Because a fail to effectively implemented will comes to get a high risk for the Islamic finance industry itself. So in order to measure the Sharia governance practices, I propose to construct a Sharia governance practices index. So what are the components to include in Sharia governance practices index? Is by considering a few important Sharia governance mechanisms such as board of directors, management, Sharia committee, Sharia audit, Sharia risk management, Sharia review, and Sharia research in order to measure to what extent the Sharia governance practices in our Islamic financial institution. So these are the proposed index, okay, in order to develop the index, in order to measure the Sharia governance practices. So these are the components that I already discussed in a previous slides. Okay, so due to limited time, I think that's all from my presentation. Thank you.
Thank you, Nora Asila, for presenting this paper by Rusna Binti Hassan. Any questions so far? Well, this has brought us to the end of our panel. If there are any questions to any of the paper presenters, this is the time to ask now. Okay, if there are no questions, thank you so much for participating and presenting your contributions. I hope to see you in the following panels today. Thank you. Selamun Aleyküm.